Yeah, there are several things that traders are watching. Once again, Carl, we're back in the special relationship between the yield on the 10-year and the indices. The yield up above 315 for today would put some pressure on the markets. Right now, we're down in neutral territory. They break that 4,000 area, it'll be key. That'll change a lot of charts. The technicians, I'm just a cocktail napkin technician, but the professionals will then be looking at where the next support levels are, and they are down around 38.50 or so, if I can see this right. And so we're in a very key testing area. One other thing, as John Fort correctly said, people were surprised with Putin's speech not being more direct. There was also, for the first time in my memory, no airplane flyover in the parade. And that could have some interesting meanings about security and other things. So traders are going to have to watch a great many things today. That yield on the 10-year, the levels if we break them. Another key level would be Apple at 150. So we've got a plate full of things to watch, Carl.
Yeah. What happened to the view that 90% down days are constructive? Does that hold today? And one of the things we talked about with Kramer this morning was the VIX refusing to go above 35, even 34 this morning. Why, given so much of the carnage right now, Art?
That is a key, Carl. I think last week or so you asked me about, I think it had been the previous Friday sell-off or whatnot. Yeah, those 9-to-1 sell days could be capitulation, but you've got to get that VIX to kick in. You've got to see some of those option players say, okay, this is enough. So if you got a 9-to-1 sell-off day and the VIX up at 40, I'd throw my hat in the ring and say, I think that's a washout. But unless you can get the two together, you're going to be somewhat suspect here.
Art, it's Morgan. Speaking of hats, the fact that some investors and some strategists are coming on and hanging their hats on this idea of peak inflation and a stabilization in terms of the inflation data and how important CPI is this Wednesday. Do you buy into that, or are there just bigger factors at play here and it almost doesn't matter whether 8.5% was the top or not?
No, I think it will be critical. It may not be flipping a switch here, Morgan. I think this idea of transitory and pipeline influenced inflation is still out there. So people are wondering, there are many of us who bought into the pipeline inflation thing, who thought that after the Lunar New Year that China would begin to ease up, and then we had the COVID outbreak, and that never came about. So we'll be watching. I do think, as I say, it's not going to be flipping a switch, but people will watch the inflation data that we get in the middle of the week and some data after it. If it looks like it's going to go down, that will raise hopes. That won't be a quick signal, but will tell people, more importantly than what the stock market's doing, that may allow the Fed to go maybe one more 50, but not promise two 50s in a row. Way too early to say. I think it's out there as a possibility, but Morgan, I would not see it as the flip of the switch that will tell you, okay, that's it, let's go.
You just talked about that key level for Apple. I mean, just given the fact that the mega cap tech stocks were so key to the markets moving higher over the last couple of years in general, without them participating, is this a market that can actually begin to move higher at some point?
It will struggle, but certainly without Apple and to a lesser degree Microsoft, it can't happen. Apple is so heavily weighted in so much of this stuff and is such an influence. I mean, people are talking of it as an object in a flight to safety. I mean, how secure can you believe your stock is going to be if people are talking about it in a flight to safety. So Apple, I think, here is critical. I don't think the others, Facebook, for example, it has fallen because in the last move in, people began to question their business model with the Apple anonymity things. So, and you're seeing business models being challenged. A little bit of that in Amazon, although the cloud is carrying them through. So, but I would stake a great deal on Apple and pray that it doesn't break below 150. If it does, and or the indices begin to break below the levels I was just discussing with Carl, then I think we have more to do on the downside. But if those two things happen, then that would tell me it might be a good deal more to do.
Hey, finally, Art, to the degree that we're watching crypto and Bitcoin, new lows for the year, a lot of the usual suspects in that space are down markedly today. Do we think that needs to be unwound in the way stay-at-home names were unwound and media names in the COVID era were also unwound?
I do believe that. I think that's also got some more work to do on the downside. The trouble is the timing here, Carl. If it is coincidental with pressure on stocks, as it seems to be right now, and if Bitcoin were to break 30,000 at the same time the S&P broke 4,000, that might go across a broad psychology and do real damage here in trying to get things back together. So in a long answer to your question, yes, I do think that has to be unwound a bit. But if it comes simultaneous with a crack in this market further to key levels, Nelly bar the door.
Right. Well, we're getting closer to both of those now at 40.26. Art, appreciate it as always. I have a feeling we'll talk with more frequency soon. Art Cashin.